All right, iBank Coin. It is Chess and Wine here on Friday, October 22nd, 2010. I'd like to do a video market recap with you. What you're looking at is an updated daily chart of the S&P 500. And first and foremost, again, just to state the obvious here, we remain in an uptrend here. We've been in one down here since late August, early September of this year, and it's been a pretty powerful uptrend here. We really haven't seen any kind of sharp corrections. Rather, the market, especially when we're up here between 1130 and 1150 here in late September, the market has shown a propensity to correct in time rather than to correct in price. So I think that's even more indicative of a powerful bull run with a strong underlying bid, because usually what you have in this kind of situation, you have people who were positioned in a very bearish bias down here in late August, because we had a terrible August, and throughout the course of September and even October, what you have is a situation where you had many bears and underinvested bulls who are kind of trying to play catch up, who are trying to either hopefully get some kind of pullback so the bears can kind of recoup some of their losses on the short side, and the underinvested bulls can find better entry points for longs. But what's happening now is, as usual during a trending market, is Mr. Market is not being very friendly, is not kind of acquiescing to those wishes and desires, as opposed to, and I'll zoom out here, throughout the course of the summer, ever since late May when we came down after the flash crash, we were in an oscillating market, the epitome of a trading range. Now, like I said, we're in a trending market, and despite the fact that over the past week, especially on Tuesday where we saw a sharp sell-off, it's been frustrating a little bit for longs in many respects. We've seen some false breakouts, some reversals intraday. Nonetheless, we're operating above all rising major moving averages here. In fact, what we had today was what's known as a golden cross, where the 50-day moving average crossed back up over the 200-day moving average. And as you recall earlier in the summer, actually in late June, early July here, we had a death cross here, and that really didn't come to fruition really for the bears. So, I'm sure the financial news media, CNBC, is going to give it some attention. If and when they do, and if the market's starting to rally, that might be a reason to hold off on that. On iBank Coin, I know Woodshedder under his tab has done quite a lot of work about golden crosses and death crosses and the statistics. So I think that is something to look at. But as far as what we're dealing with right now, we've got a market that on Wednesday, October 13th, so over a week and a half ago, the market came up and touched a high of 1184. Today we closed at 1183. So despite all these moves that we've seen over the past week and a half, really, the market more or less has just been consolidating, just like it did, you could argue, right below 1150, before we exploded up. So again, despite the idea that the market is topping out here, that the market is tired, the market remains in an uptrend, and that until we get some more evidence that we're rolling over, that we're going to see a sharp correction, that is the default way to go, because otherwise what you're doing is you're trying to call a top, you're trying to fight the tape, and that is long-term really a losing bet. So that's the S&P 500. As far as the NASDAQ, it's just a real similar kind of situation. You have a situation where the NASDAQ, sure, it came down just like the S&P. It marginally broke this rising support trend line. It's starting to consolidate on it. But again, to expect an uptrend to adhere to such a steep angle of ascent here is really not realistic. Instead, what you'd expect is just like we saw earlier in the uptrend, where it's a sharp move up here in September and then a flattening out period, and then it would turn out to be a bullish continuation pattern where we continue higher here. So I think that's kind of the default frame of mind here. And again, until we get more evidence that not only are we seeing one intraday reversal, but we see follow through that from the bears. And again, we're operating above all rising major moving averages here. The weakest area of the market continues to be the financials, and as you can see here, although they've been pretty weak here, as you can see throughout the course of the past several months, the patterns have been very loose and sloppy, and now they're starting to tighten up. So that's something to keep an eye on.